Everybody, before we get into this evening's update, let's go over a quick synopsis of what to expect. First, we're going to talk about not only just the XRP daily technical analysis, but what's going on in the current market and the pure and obvious manipulation that is being seen on the charts. But we're also going to talk about the importance of dollar cost averaging, and we're even going to talk about what DCA is, what the dollar cost averaging is. A lot of people talk about it on social media, but what they won't tell you is the key to it. You've got to find your spots to start dollar cost averaging in. I live by a very simple motto in life. I won't buy XRP over 40 cents, not because I don't trust it. As in the past, I had it at a 47-cent average, sold it at $1.66, and waited very patiently for these times since mid to late 2021 to be able to buy back in sub 40 cents and buy it into the bottom. The importance of buying at 40 cents and cheaper is even if you buy it at 40 cents, every time it goes up $1, that's 250%. So if you, that's just what you're making, not up 250%, but 150% for every dollar. So 150%, if you have a $5,000 investment, just every dollar that goes up, that 5,000 turns into 12,500. So you start doing the math and you're like, holy shit, it's all about where you buy. So if you're doing that and you're buying it at $1.60 and dollar cost averaging in, well, it's going to be a little harder to make that significant amount of money you want when XRP's high has only been $3.40. To me, as we build down to the bottom, and who knows, we don't know how low it's going to go. Maybe the 29 cents when it hit or the 287 was the bottom, but I believe we're going lower than that in this environment. Now, the importance of building at sub 40 cents again is if we can build it from 40 cents down and you have that kind of an average, you allow yourself to where even if XRP moves back to $3.40, if you average 40 cents and XRP goes back to $3.40, I mean, 4, 8, 12, what is that? I don't know, 850% just to get back to all-time highs. So it's more about where you buy in and less about the long hold, or even the philosophy of dollar cost averaging is smart. You just can't do it from a top. You don't want a dollar cost average from the top in a bull market. You want to start dollar cost averaging in the bear market where we're at now. We got to level sub 40 cents with XRP where it is the appropriate time to dollar cost average. Even today, if you have a set amount to buy weekly, so this is more of like a guide to what you need to do, because we're getting into these volatile times, and I think a lot of people are getting it twisted now. They're not understanding when you're supposed to buy into a market and even how dollar cost averaging works. I'm going to show you the proper way, as I've already spoke about, but we're going to go into deeper what dollar cost averaging is, and we're going to look at the charts as well. I'm going to play the intro just so we can get into the charts, even though there's been a lot of valuable information already done on this update. And make sure to hit that like button, as it really will help push me through the analytics. It really does. You guys have been doing a tremendous job lately, and it's really been reflecting in the views and the likes. Good evening, 8:07 p.m. Eastern Standard Time on this Monday, March 13th, 2023. I'm XRP Future Millionaire, and I reside in the great state of Michigan. So remember, everybody, the importance of this update tonight, and this is one of the more important updates I've put out in a long time. Yes, the information is good in some of the other ones, but just the message in this one, you need to understand. When you dollar cost average, you basically lock up an asset, you target something you believe in, and as a group, we all believe in, we all trust in XRP. That's why we're all here. That's why you started following me, and that's why I started putting out this content, because I thought that I could put out the best FUD-free information along with my skills on the charts, because I understand, the help lead the direction so we understand where we're going in the short and long term, but also the message I can give out without, the bullshit. So we're all here for the same reason. We love XRP and we believe in it long term. But and then because of that, we targeted the asset, but now we got to target the right price point. Well, the proper price point for XRP we targeted from $1.66 when we sold, in 2021, and we said under 40 cents is the proper time to start buying, and we hope it goes as cheap as possible. But we're going to start buying in sub 40 cents, and we're going to have a set buy-in, and that's what we started doing. And we've had an extended period. And yes, we want it to go lower, but the amount of time we've had, you should be able to buy back what you wanted to when you sold out at $1.66. Remember, it's 80% cheaper. So you can buy all of your stuff back that you had at $1.66 for 20 cents on the dollar, which means you spent and got all. So if you had 10,000 shares, you can buy them all back and still have 80% of your funds if you buy it at 40 cents or cheaper. That's from the $1.98 high. From $1.66, it's something like 75 or 73. I don't remember exactly what it is, but it's something ridiculous. But if you buy it back now, for anybody who was going to buy it in 2021 when it was at $1.98, just think of this. You bought it, or you got rid of it, or whatever the case may be. You're saving 80% right now. So you've still got your portfolio, even if you sold it at $1.30, and you've only got 60% left. You know, I mean, you can buy back a portion of it, even if it's a majority of it, and you should still have some 70 or 80% of your portfolio left intact. And then you buy it more when it goes cheaper than that. So then it goes sub 35, let's say, if you bought it at 40. And then it goes sub 30, and then sub 25. Because the worst thing that can happen here is you're seeing with the manipulation is that all this happens, all of a sudden the government goes into quantitative easing, and it rockets out of here, and then the retracement only gets you back to like the 40 or 45 cent level. I firmly believe XRP is going to go to sub 20 cents because I think we're going to retest the December 2020 lows when we had the lawsuit announced, you know, some 2.5 years ago now almost. And I think that's what we're going to do. I think that's where XRP will rise out of the ashes, so to say. And that would be a big downturn in the market. And this, what's happening right now, scares the hell out of me. It scares the hell out of me. Not for me personally, because I already have a plan, but for the unaware traders. What they're doing in the markets right now with the collapse of not only the 16th largest bank in the USA, which was Silicon Valley Bank, but that was one of the largest banks and most crypto-friendly banks for venture capitalists, for ones to get their money onto crypto, you know, and for ones who are in crypto startups, tech startups, and such. Even Ripple, confirmed by Brad Garlinghouse, has money in Silicon Valley Bank. Now, with the government saying they're going to bail out not only Silicon Valley Bank, but we all seen what happened with Silvergate. It appears the government's going to make everybody whole there again. Now, they're saying make them whole, but we'll see if they actually pay out anything over $250,000. The news likes to stretch things. We'll see if it's actually going to make whole. I find it very hard to believe that anybody over $250,000 that everybody's going to be made whole. But hey, I'm a mongoose, right? So between that and then Silicon Valley Bank, like we talked about, and then yesterday, it's just, I mean, I don't know what else to say. We've got a lot of problems here, but not a lot of people and not a lot of things. So the third bank, Signature Bank, is another crypto-friendly bank. So these are three crypto-friendly banks that have been taken down. And this one's in New Jersey. And I did an update yesterday. If you haven't seen anything and you want to learn about it, just go look at my recent videos. I think it was not the last one, the one before that. But they're in New Jersey, and the state regulator shut them down because they say they're worried. So they shut them down. They took them over out of fears what happened with Silicon Valley Bank, and Silvergate was going to happen at Signature Bank as well. So this is the third crypto-friendly bank in 5 days to fall, but the markets are just like, fuck it. And the government's like, the hell with it. We'll just print out more money, and then they'll pay for it in their taxes. The other thing is, ladies and gentlemen, and we'll get into the XRP chart. Oh, yes, we will, and we'll talk about dollar cost averaging as far as the terminology. Other thing you need to realize is, when inflation's up and they're paying you more money, you know what they're really doing? You're getting the same amount of goods. It's just costing you more money. Your paycheck might signify that you make more money, but all they've done is cheaply, methodically, and dickishly, mind you, push you into the higher tax bracket. What does that mean when you're in the higher tax bracket? Less money in your pocket. Okay, so with less money in your pocket, you're working more jobs. So uniformly, this is all working its own game. Now, what happens when everybody gets excited and what I'm calling now one of the biggest bull traps I've ever seen set, besides when we went up to like 58 or 60,000, this is a different kind of methodical, what they're doing right now. This is a different time in the system. This is going to hurt a lot of people. So you're probably like, what the hell, man, 10 minutes. But this is, I'm telling you, this is one of those updates that you really need to pay attention to. And now look, XRP came up here again, and we're using this as like a channel, a falling channel. We've talked about it. We don't want to call it a broadening wedge because that would signify a guaranteed breakout. But we will say that that is in play. But to me, it still looks like a falling channel. We started way up here, and we're going to do this one more time for everybody, since I have your attention, and everybody's probably honed in. This is going to be a longer update, as you can tell. January 24th, resistance. Resistance on February 4th. Resistance on February 21st. Resistance in this whole clusterfuck right here on March 10th. Resistance again here on March 12th, ironically. Or March 13th, today. Now you come down here. Support right here around January 21st, 22nd. Support January 30th. Support February 9th. Support in this little clusterfuck here on February 13th. Support right on X marks the spot, basically. I didn't quite make it, but it came down here, and it didn't have to break it yet is the point. So we didn't get to test it. So we can't really say it's a true support hit there. But we came back up there. So the point is we have 3 hits on support. Actually, you know what? Yeah, no, it didn't come all the way. That's the volume. I knew it didn't come all the way. So we're not even going to count that part since we're consolidating. That's where this kind of this uptrend trend line that's there plays in. And you can see how it actually used that as the support. But we've had 3 hits of support and 3 hits of resistance minimum on this, what I call falling channel. And that confirms the pattern. So right now, like I said earlier in the update, but if you weren't there, you wouldn't know. So I have to, go over it again, which is fine because we should. 383. 383 is the first resistance we're looking at. We could say the 382, but I don't know if I'm comfortable with that because it is coming down here. Let me see. No, the 383 I'm more comfortable with because it hasn't come down far enough. And right here, yeah, I'm going with the 383. So right now we're trying to break the 383, and if we break that, the problem is, though, is it looks like, and these are always scary, when it has a pull up like this, and we have to pay attention because it doesn't always play out like this, but sometimes it comes up and it looks like a bull flag, but because it came down like that, it actually creates a small bear flag, which will actually make you retest this area, which could make us very quickly come down to like that 362 support area. So that's just something to pay attention to. So we need to break that 383 to start pushing out, and then where we're going to find ourselves as we push out, and you can see it right in here on the actual all-time chart, it would get us to that 388 resistance, and that's where our next level of resistance would be. So right now, if you're looking at it, R1 would be 383, R2 is 388. Very, very tight, but we have to make sure we pay attention to that. Actually, you know what? I take that back. R1 is 377, R2 is 382, or 383, R3 is 388. It's very tight tonight, very tight. So that's what we're looking at right now for the resistance. Support areas, we don't really worry about the support areas right now. It's all about the resistance because if the support areas start to fall, it'll be pretty easy to see where we're going to come down to. One of the support areas, a major one, is down here at the 355. So it's 352. Actually, it is lower now. So it's not 355. It's 352 right now. So one of the supports is down there at 352. On the 1 hour time frame, though, you got different levels, so we try to keep it in I try to keep it in more of a broader perspective. A major level, though, in the 30-minute time frame for support is going to be that 368 level. So you got the 368 and 362, followed by about roughly the 352. So those will be your 3 support levels in the nearest area. And then if we look at this in a little bit bigger time frame, and like a lot of people are like, in the comments, they appreciate the fact that I give it straightforward. And that's, if you're new, that's one thing that this is it. This is my style updates. There's no bullshit in here. I'm not here to give you some bullshit. I'm not here to tell you about some sponsor or anything like that. I'm just going to give you the charts. And if it makes you not like me, so be it. And if you like me, I'm forever grateful. Because I'm really giving you the genuine truth of what I believe it to be on the charts. because I want everybody to prosper, because what we're coming into in the 2025 and 2024 and even in 2023 in this new financial system is going to be horrendous. So, and everybody's like, well, what is this on the chart when I did it last time? I'm going to keep that, not that one, but this one. This is if we were to break out over here, ladies and gentlemen. It's, don't read too much into it, but it's, let's say we came down here and we keep holding this uptrend at 34. I've got this timed out that if we end up coming down here to about June 25th, that we would have a pretty nice breakout, and it would push us 36.99%, 16 bars is basically. But that would be the trajectory, and it would be a pretty sudden bounce up. So from about January 23rd to about July 15th, we would go up about 36.99% if we stayed on this uptrending support. This is only if this uptrend holds and we don't break this 2020 uptrend. Then we would have enough steam to at least double top the break point, and then we can see what happens. But that's only if we make it to the apex and we break it through here, and then we break up to this level. Then we would have a top end of about, if we broke it right here, then you could see the top end here on the all-time pattern at about 42 cents. And then the ultimate breakout will get you to about 50 cents. That's if we hold it through June. So you can see how it would be tightening up. And it wouldn't even come up anyways, really, on this big bear flag that's all the way up at 81 cents. It would confirm this bear flag. That would be the fake out move where everybody thinks it's going to do the reversal, and then it could crash back down. That's the scenario I'm playing right there. If it breaks up, if not, and we lose the 2020 uptrend, then we come back down here to 18.9 approximately. So I have a plan out here. Just pay attention to my updates. Pay attention to my updates, ladies and gentlemen, because it's already mapped out here. If it does play it this way, that's a 13.46 cent move. So that's why I say dollar cost average. And to end this update, we're going to talk about the dollar cost averaging. So this is what it is. Because a lot of people talk about it, but they never get into exactly what it is. So dollar cost averaging stands for, or DCA stands for dollar cost averaging. It is an investment strategy when an investor invests a fixed amount of money at regular intervals, for example, monthly, regardless of the market conditions. But like I've said before, and I'll say it again, you have to find your starting buy, and then dollar cost averaging works. If you just buy it everywhere, it's horseshit. That's just my personal opinion. You have to find a starting point that makes sense. And for me, it's sub 40 cents. And it's been that way since $1.66, and I've been very vocal about that. Dollar cost averaging is a long-term strategy that can help reduce the impact of market volatility on an investor's portfolio. By investing a fixed amount of money at regular intervals, an investor buys more shares when prices are low and fewer shares when prices are high. The goal of dollar cost averaging is to reduce the risk of investing a lump sum of money at the wrong time. Rather than trying to time the market, dollar cost averaging allows investors to gradually build a position in a particular asset over time. So you don't want to be doing that in your particular asset from $1.66 to $1.25 to 88 cents to 62 cents. And the reason for that is if you invest $250 weekly, you're getting a lot more bang for your buck when it's up 40 cents. And I'm going to continue to say it. Some people laugh when I do this, but it's true. When it's up 40 cents, you take it to the bank. Sub 40 cent XRP. I remember when it was $1.50, people would laugh at me like I was just some dumb fuck. And now people laugh at me because I say to buy it sub 40 cents because it could go sub 20. I mean, where the hell is the disconnect, ladies and gentlemen? Let me be the voice of reason in this update. So, but to invest a lump sum of money, you don't want to do it at $1.66. You want to do it sub 40 cents. And the only way to do it is if you've been following along this whole time. Dollar cost averaging is commonly used for investing in mutual funds, exchange-traded funds, ETFs, and other long-term investment vehicles. However, it's important to note that dollar cost averaging does not guarantee a profit or protect against losses in a declining market, because the people invest at $1.66 and not sub 40 cents for XRP, and they're already down 80% while they're at dollar cost averaging. It's hard to dollar cost averaging when you started when it's 80% up. You see that, folks? If you're dollar cost averaging and your asset goes down 80%, you're doing it wrong. That means you don't understand the charts, and you need to watch somebody who you can trust like me to tell you when to buy at sub 40 cents. Not at $1.66, not at 75 cents, not at 92 cents, because I will not buy a single XRP over 40 cents. People laugh now because it's under 40 cents, but when it's at 72 cents, they're going to say, damn, he never bought it over 40 cents, but he bought a bunch while it was under 40 cents. We should have did the same. And people say, when should I buy XRP? Like I've said before, under 40 cents. Sub 40 cents is the key time to buy XRP. Sub 30 cents is just a, you get on your knees moment, and if it goes sub 20 cents, it's a gift from God. Set a regular investment schedule. The key to dollar cost averaging is investing a fixed amount of money at regular intervals, whether it's monthly, quarterly, or annually. Stick to a schedule and automate your investments if possible to ensure consistency. So if you want to do $250 a month, just make sure XRP is sub 40 cents when you do it and you'll be on the right track. If you bought XRP over 40 cents, that doesn't mean you sell it when it's this cheap. I'm not sure what you're trying to prove if you sell it at sub 40 cents. Even if you bought it at $2, why would sub 40 cents be the time to now sell it? Now would be the time to continue to buy at sub 40 cents so you get that dollar cost average down from $2 to like $1 if you could do it the proper way, even more if you could just invest a whole shitload more money. If you got to collect cans, that's just the way it's going to have to be because we put ourselves in a mess if you've done it that way, but you got to dig yourself out of it. There's no time to feel sorry for yourself because you've got the future right now, and the future right now, you can hold it by the balls or you can kick in the balls. It's up to you right here, right now. So choose the right investment. Choose an investment that aligns with your long-term financial goals. Our investment is XRP. It aligns with our long-term investment goals. At least this portion of our funds. We've also got some of our funds that will be our stable, to keep our store of value, which is our gold and silver. We've also got our money we have to keep in fiat to play the government's game. But then we've also got 1/3 that we can put in crypto because that's our speculator money. But if we do it properly, our speculator money is going to go into foretold wealth with XRP. We can talk about the rest, but we're here for XRP. So, and have good risk tolerance as well. Mutual funds, ETFs, and index funds are popular choices for dollar cost average strategies due to their diversification and low fees. And then obviously consider the fees. Pay attention to the fees associated with your investment vehicle. So that would be our exchanges where we buy our crypto. That's why I suggest, and you can find this in the video description below and or the pinned comments, BITGET and or MEXC. You have no spot fees on the buy and sell. But I also advise you to keep your money on UPHOLD so that, especially if you're in the USA, because you can keep it in your native fiat and it's not in a stable coin. Your money's just there in USD. So you won't be affected by the day-to-day movements of the stablecoin like you will on BitGet and or MEXC. I advise you only use those platforms so that you can buy the assets with no spot fee. Take advantage of the game, ladies and gentlemen. It's that simple. So consider the fees. Pay attention to the fees associated with your investment vehicle. Fees can eat into your returns over time. So opt for investments with low fees. And then this is the most important thing of all. And then I will let you go. And if you want to join Tom's Army or if you got anything out of this, make sure to hit the subscribe button, first of all, and hit that like button. But if you want to join Tom's Army, join me on BitGet and or MEXC or UPHOLD. That's all in the video description below and or the pinned comments below. Also, if you want to send XRP, since one person did yesterday and I was eternally grateful, I put that in the pinned comment as well below and the video description below. So I appreciate everybody for the support. And we're going to end with this. Remember, if you're dollar cost averaging, be patient. Buy XRP only sub 40 cents. You've got to do it the proper way. And dollar cost averaging is a long-term investment strategy. Don't expect immediate returns or panic during short-term market fluctuations. Stick to your plan and remain disciplined. If you see short-term moves down, that's when you want to buy even more because XRP sub 40 cents is a tremendous deal. I'm XRP Future Million.